Let's bring back in our panel, Gregory Daco, EY-Parthenon Chief Economist, and Zach Griffiths, Wells Fargo Senior Macro Strategist. And Zach, we'll start with you. We are awaiting comments from the Fed chair just about 5 minutes away now. What would you like to hear from Jerome Powell? And what could he say that would actually shock the markets at this point?
At this point, I think it would require a lot of detail on the plan for unwinding the balance sheet to shock the markets. I think they've done a lot with this release as we've gone through already. So I think if he were to really lay out a concrete plan and make it clear that they are going to begin the runoff, or I should say announce the runoff at the May meeting, I think that would just be the cherry on top of this very hawkish Fed. And so that's really what we're going to be watching out for with respect to Chairman Powell's comments coming up here in a few minutes.
And Greg, the same question to you, sir.
Well, I think there is no need to shock the market today. We are in this uncertain environment with this backdrop of what's happening in Ukraine. So I think what we'll see from Powell is actually a lot of transparency. He will explain why his position has shifted. I think his position is key in this slightly more hawkish perspective from the Fed. And he will detail where the Fed will go. That's really key. There is an important factor here that we have to mention again and again is how monetary policy is influencing economic activity and whether the stance is getting close to neutral in terms of accommodation. The Fed will want to calibrate how much accommodation it removes and how much tightening it does over the course of this year, and key communication around the pace of tightening and the endpoint will be essential in preventing a market shock, because we should not forget that there's one traditional channel via which monetary policy affects the economy, which is a credit channel, but there's also the financial conditions aspect. And the Fed does not want to be in an environment where financial conditions are tightening way too rapidly, and that is having negative spillovers onto economic activity.
And Zach, I want to bring you in here because, I mean, for a lot of us, we assume that this move was baked in. But then if you look at how the markets are moving downwards now on this news, why is this happening? What were they hoping to hear, or are they just awaiting more color from Fed Powell?
I really do think that this is more hawkish with respect to the near-term expectation of 7 hikes in 2022. And again, what's big to us is them explicitly signaling policy in restrictive territory in 2024 by that 2024 dot being above the longer run dot. So I think the Fed has made it clear that while the geopolitical backdrop is challenging, that is not their number one priority. Their number one priority is inflation. They realize they're behind the curve. They need to act quickly. I think they've opened the door to 50 basis points, and it'll be interesting to see exactly how Chairman Powell maps out what he thinks is appropriate and how much detail he'll give, but it's very clear they're on an aggressive path, and that's going to be the case for the foreseeable future.
Just very quickly as well here, Zach, would love to know, especially considering all that we've seen in terms of what oil prices can do in rattling everything from supply chains to hiring plans to ability for companies to operate, how that has impeded some of the economic recovery that the Fed was banking on in order to enact their policy decisions, and where that continues to be a headwind in the near term.
Oil prices are certainly a challenge, and they hamper the consumer's abilities to spend on other goods and services as the economy attempts to normalize from the 2 years of COVID we've had to deal with. So it presents a challenge. We see the Fed has acknowledged that with bringing down its GDP growth forecast quite a bit. But again, that's on the margin right now. They're focused on inflation, and they'll see how the economy evolves after this initial rate hike, perhaps a couple more, and we'll see what happens to energy prices. But it does present a challenge in which they have energy prices hurting the consumer as well as tightening policy, which should hurt the demand side. So it's something to keep an eye on going forward. But again, the Fed appears to be steadfast in its commitment to tightening policy now.
Now, the press conference will start any minute now. But gentlemen, I did want to get your take on what we might hear on this $8 trillion balance sheet. Obviously, a lot of that expanded by some of these emergency COVID measures. What are you hoping to hear on that front, Gregory?
Well, I think what we want to hear is a little bit more clarity as to the plan itself. What will be the likely pace of the runoff and balance sheet? Will it be organic? Will there be an effort to actually try to sell securities at a later point? When will it start? We know from the statement that it will begin at a coming meeting, which seems to indicate that is likely fairly soon. But the pace of the runoff in the balance sheet will be key, because what you're going to be seeing this year is a combination of higher interest rates as well as balance sheet runoff, two tools that are going to be utilized to tighten monetary policy. So the combination of these tools and how they're expected to be used over the course of this year will be key. And I think we're going to hear from Powell more as to the Fed's intentions and the Fed's recent discussions around the balance sheet.
And Zach, your thoughts on what we might hear on the balance sheet as well?
I think Greg hit all the key points there. I'd be a little bit surprised if we got that much detail. I think we might have to wait until the release of the minutes in about 3 weeks from now to really see the discussion. And if they haven't arrived at concrete decisions, that's all it is at this point, a discussion, and Chairman Powell won't be able to share all of those details in his press conference. So that's kind of how we're thinking about the information we'll receive here over the next hour or so.